Three ASX stocks have quietly dipped in the background, and their share prices may have just found major bottoms. So is now the time to pounce? We'll break it all down and show you how to navigate these stocks like a pro, backed by Australia's leading government accredited share trading education and insights that are sought after by major media outlets Australia-wide. I am Philip Tortevsky, joined by senior analyst Pedro Banales, and we are Wealth Within. Good evening.
Good evening, Phil. I'm excited about the stocks today.
Yeah, I mean, these ones we've picked from, I guess, the areas of the market, not much media attention, you know, a bit obscure, haven't been going up, been falling, but oftentimes, as you know, when the market is looking away, that's when the best opportunities arise. So let's dive right into the first one, which is Centuria Industrial REIT, stock code CIP. Now, Pedro, this one here, mate, this is obviously a REIT, but it does have exposure to industrial warehousing and its data centers, which is growing. It's going to be doing about a $60 million data center project coming soon, I think out in the southeast, upcoming. And as you know, that space is one of the hottest spaces right now in terms of demand. When I look at the share price, it gets even more exciting because let's forget about all of this good stuff. That 280 level has been one of the most consistent, significant levels for this stock since 2020. And if I go back even further and just look at this momentum line, back from 2014, this momentum line catches every major pullback on CIP up until today. And funny how recently we just came to that crucial level and have found a bounce. We've had 4 months now where the stock has failed to move lower. And so right now it looks very, very interesting for a nice upside potential to around that $3.59. You got to be realistic with where things are with Centuria. It has been range bound to that 359, 360 level. But I guess the big outlier right now is this data center exposure, which is growing. That might be the catalyst to send this through that 359 barrier. Again, as traders, we're not, fundamentalists. We're traders here first. We've got to look at what price action tells us and look for that opportunity that comes first. And that opportunity is to that 359 level. On this monthly chart, we have found buying as mentioned. So, I mean, that represents, I think, up to from here about a nice 20% upside. And on that weekly chart, we are starting to see remnants of buyers taking control. That's the beautiful thing that we want to see. We saw that initial low in April. Buyers come through. Sellers have had 4 weeks to take it lower. They tried, failed, another push by buying, and now sellers have got involved and they're holding above where buyers recently, or where sellers recently tried to take price down, which is through that level. This is all promising. If we can hold above that $3, I think we're going to push higher into that 310, 313. We take out 313, then we've got a really nice runway to start attacking those levels. And you can see, if you're someone looking for opportunities on this, if you understand or are well versed in the technicals, then you do get opportunities all through this leg on the way up. It's not something that over the last couple of years, if we measure every single time that it bounced through these levels, it doesn't perform like something like a material stock or a gold stock where price action can be very vast and quick. So this one does provide good opportunities if you know what you're looking for. Pedro, your thoughts on CIP, mate?
Look, this is Australia's biggest industrial pure play REIT. So you're dealing with a nice blue chip type of stock. At the same time, its PE ratio is around 13 and it's paying a good dividend around 5.4 if I remember correctly, so 5.4%. So the fundamentals are intact. We've got the technical story like you've outlined there coming into play. We've got that nice pull back to that nice momentum. And, you could even put another momentum from that 2013 low, right up those lows. And now they're converging right now. It's holding up quite nicely and looking like it's finding support. Another thing that I do like about this is that it does provide multiple chances to get in this stock. And you can really keep it really, really simple. And I'll just outline just some, very basic momentum that we're seeing here. And every time that it crossed above that momentum, it offered an opportunity and the upside was quite significant, around that 17, 18%. And like you said, from this current move, there's about that 17% upside. And like we always say, once you have well versed in technical analysis, and once you can apply your rules consistently, all you do is move the decimal point, because that's 17% on whatever you outlay. But if you add in leveraging, or you add in CFDs or derivatives and things like that, then that's when you can really supercharge those returns. So it's really about keeping it nice and simple on a nice liquid stock, because that's another thing to keep in mind, that this has a lot of liquidity in it, and it does offer opportunities to be able to sell and buy at the price that you want. So that's very, very important. So I do quite like this one. I think that it's setting up very nicely, and I'll just add in one little extra little thing here for you guys, and that's that nice momentum that it's established to the upside.
Yeah, I think you said it well, because maybe a lot of people aren't, don't know that we do look at fundamentals on this show also. We are predominantly technical based, but as Pedro mentioned, we do teach the fundamentals, we do look at the fundamentals, but at the end of the day, and I'd love to get your thoughts on this, Pedro. I mean, we could sit with any guru, macro, economist, fundamentalist, and really just ask one question when we're looking at a stock is, you can tell us the great story, you can tell us all the future catalysts, you can tell us where value sits, when are you going to buy? And a lot of the time there's no answer for that. And you find after years and years that answer there really spells for so much more than people realize. And retail traders, that's why they have such an advantage at home, is because if you learn how to buy and sell well, you really are one step ahead of the game. Everything else is living in the world of ifs and buts. And so on that point, check this book out. It's How to Beat the Managed Funds by 20%. It is free. You just have to pay the shipping. We do show, the link is in the description in this video below, but we do show a lot of examples, and time again, go check out our website for our diploma of share trading and investment if you do want to take things professionally. It is government accredited, but go back and look at some of the previous videos that we've done on this show and our Tuesday show, and see how powerful technicals are and what they can do for you in terms of some of the stocks we've looked at and what they've done since. It'll really blow your mind. But thank you again for tuning in and watching. And also, please, if you do want to take things serious, go check that website out, wealthwithin.com.au. But let's now dive into our second stock, REA Group, Mr. Fundamental Guru. Pedro, what have you got for us? We're going to get some haters after this, but we do love fundamentals also, just so you know, guys. It's not, I've said too much.
Oh, yeah, definitely. When the fundamentals and technicals align, that's where you really get those exciting trades. And that's really what we want to see, because at the end of the day, the people that are going to be moving the market are going to be those big fund managers and those big fundamentalists. So what we're doing really here is just riding on the back of those waves and those price increases. So now we have...
Can I just jump in? There's also, it's important to know that, we are coming into earnings season right now, in a month or so, and it's going to be ever more important. There's going to be announcements come through. But it is also true that just purely there'll be so many stocks that are beaten down, bad news, bad stories, and yet the share price starts to rise. Domino's is an example of that. And we've got one stock coming up that is a huge example of what could potentially be the biggest reversal story of 2026. So get ready for that one. But my point is, I've seen great fundamentals and I've seen stocks get hammered. I've seen poor fundamentals and I've seen stocks go up, like the Zip when it wasn't making any money back during the COVID era. So it's really important to know where they sit and know how much importance to place on each thing relative to where you're buying and selling. I think that needs to be said, because just purely trying to use fundamentals to gauge where the stock is likely to go to next with no care for watching what price is doing, I think is playing the game blind and is going to hurt you a lot more than you realize.
Yeah, absolutely. If you gave me a choice, if you put me in a trading tournament and said I could only use one, fundamentals or technicals, I'd choose technicals any time of the day. So definitely that's a great point. Now, the stock that we have next is REA Group, which is one that a lot of people here in Australia would know, whether you're looking for a home or looking for a rental. I know the situation is a little bit dire at the moment out there. They own realestate.com.au. So basically, these guys, I think, have a pretty strong moat here in Australia, because they're pretty much cornered the market. And I know that that's awakened the ASIC a little bit, wondering whether they're having a little bit too much of a monopoly. And I've heard that they may even get into the real estate, like actual being a real estate agent type of industry. But anyway, that's hearsay. What we're seeing right now is a momentum back down to that trend there, and we have not yet crossed above that downward momentum, but it's looking like it's most likely going to do that pretty soon. When we look at the weekly chart here, you could put a little bit of a tighter momentum there and say, well, it does look like it has crossed it. We're seeing more and more volume come into it. Like I said, it's touched on that previous momentum there, and we've also got a very strong level at around that $130 where it's found support and resistance multiple times, even back here in 2021, support around that level, support there in 2023, resistance in 2022, and then more recently in June 2026. So I wouldn't be betting against REA Group. And another thing, a lot of people may think because it's an app and it's a website that this is in the technology sector. Well, it's not. It's actually in the communications sector. So communications is projected to grow quite significantly. So just remember that when you're looking at that top-down analysis, or when you're looking at that sector analysis, make sure that you're placing this in the correct one, because it is a type of communication. So all up, I think that it's looking great opportunity. What's the upside? Well, I think that it wouldn't be off the cards for it to at least reach to that 193. You could even round that off to 200. And if we do see a rise to that level, then we're looking at around that 18 to 20%. But then, of course, it can go higher until it reaches that next resistance at around 230.
And another example, perfect example, if I go to my chart of, you're looking at a scenario of, as you said, Pedro, war reigniting, clearance rates through the floor, inflation looking like going to be stickier for longer, interest rates are likely to continue higher. All of those things are supposed to be, terrible for REA. And that's in the last month what we've been talking about. Yet the share price over the last month is up about 19%. And had you not even looked or considered any of that at this point in time and had applied that line back from 2012, where it's basically touched every major low since 2012 and moved the stock forward, you would have gauged many, many months in advance. Well, 140 is probably the level I want to look for some opportunity. And we're there now, and we've started to see buying. So again, just puts another feather in the cap of what we're talking about in terms of why it's so important that you do look at the price action and the right type of price action. Not trying to zoom in on a 1 minute time frame and go, oh, this doesn't work, I can't find a trend. Zoom out and look at the big picture. It'll tell you a lot. But now is the time for our third stock, which is Nine Entertainment Group. Now, Pedro, this one here, if we go to the chart and have a good look at NEC, it's a high risk. I'm definitely going to put that out there for anyone looking at it and going, oh boy. But again, we're at such an important level that we have to have a look right now, because go back to 2016, 87 cents, the all-time low at that point in time, really strong buying from there. We get to 6 years later, 2020, literally touches that exact level, takes off for another massive run. And we're talking really decent runs. Like the IPO price was back there, if I just apply the horizontal line where that IPO price was, which is where I think the next run could at least get to. But we're talking from 2016, 200% run through there. From 2020, a 250% run. And where are we today? Right back at that level. And what are we seeing? Buyers come through. Buyers are starting to come through in July. And so this one here, I mean, I've got some notes up here. It's already said that it expects further strong EBIT growth from Stan, its digital platform. And that's something to look for as we come into earnings. If Stan, which for those that don't know is just like another Netflix, materially beats those expectations, it could surprise the market, because it would strengthen the argument that Nine's digital businesses are becoming powerful enough to offset weakness in traditional TV advertising. That's the shift to look for, or the key to success for this stock here. But again, the price action oftentimes during despair is when you'll see the best movements, and that won't be when the story's all rosy. But right now, looking at things where we are today, I think this is a really important place to look at Nine Entertainment. And just going to that weekly chart, what's interesting to me is when we're talking about volume, it's not amazing, but not terrible. We are seeing now, when we talk about each previous example, when we see the buyers and the sellers come through, the buyers shot through back in 2017 and we saw a bit of seller activity that was weak. Again, in 2020, we saw the same dynamic happen before the move really got going. And fast forward today, we're seeing a very similar dynamic. We've seen buyers come through off that March low, 3 strong weeks up. And literally from April to July, 3 months, we've tried to take out that low and we haven't. Now we're starting to see buying again. So I think in the short term, this gets very interesting once it takes out that dollar level or $2 level. If it can break that $2 level, then NSE becomes something worth watching, in my opinion, for the short, medium and long term. Again, when you're looking at the opportunity to the upside, where could it get to? Well, history tells us somewhere around that IPO price is generally a spot where this market has gravitated towards on the upside. Look at that huge accumulation at that level. Again, it's been such an important level, and we can even zoom it down just a touch if I can get my mouse to work and call it 191. A run to 191, I would not throw, as impossible. So really strong upside if this one can get going. Your thoughts?
Yeah, look, I think that it's looking great. I'm not sure how well Nine is going to do after they laid off Karl Stefanovic. But that's a different story there.
Probably
Hopefully
cut costs for a bit.
Other revenues. Most likely, yes, but I think it's to their detriment. Now, what many people may not know is that they actually own a 60% stake in Domain, which is the rival to realestate.com.au, so that stock that we outlined earlier. So these guys are the competitors, and possibly if we see REA take off, maybe we might see this one as well benefit from that. Now, of course, they have other revenue streams like Stan, like you mentioned, and Nine Now and all of that. Now, on the technicals, you can't deny that this is looking really bottomy, if that's a word, right? It's bottoming quite nicely. And when you've got something, if I tell you guys that there's 3 out of 3 times something has done something, what is the probability that it's going to do it again, or in this case, twice? And I mean, it's pretty much confirmed now that low is basically holding at the moment. It's higher risk, of course, because we've got that long-term downtrend. We've got that 2021. It's quite significantly more weighted towards that negative sentiment. But if it does take off, then you've got a huge runway, like Phil mentioned. So this is a probability turnaround story for me. And when we go to the weekly chart, I do agree that this $1 level is interesting. If it takes it out, then of course, and we're going to get more and more interest coming into it. And you've got a nice runway, at least if you're looking for a short-term trade, to that $1.80. That would be my short-term kind of target, because there is multiple levels around there. But all in all, higher risk, higher return, because even to that level, you've got 82%. So hopefully that'll pay for some groceries or anything else that's going up at the moment. So I do quite like it. Keep an eye on those levels, and I would even add, for further confirmation, you may want to wait until it's right up above that $1.1 level.